Welcome back to Liberty and Finance. This is Elijah K. Johnson, and with us today is our good friend Mario Ineko from the Mineko64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, Elijah. How are you?
Doing well. It's exciting times in the markets as we saw a new intraday high for gold above $2,100, about $2,150 or so there. I woke up today and saw that. I didn't even pay attention. I was, enjoying my Sunday and all, the gold market is going crazy. Your reaction to this breakout we saw?
Yeah, I did my live stream as I usually do on Sunday night, London time, finished just after 10. And futures market opens at 11 London time, and I went upstairs, I brushed my teeth, and then I looked at my phone, and there's a message from Clive, who was on my live stream, and this was after 11, and he said, gold's flying. And I had looked at gold on the open a few minutes after the open. It wasn't really doing much. It was up $2. Then I turned it on my account and looked 21.30, and I thought, wow. and then another friend called me, and I told him, don't get too excited, try to stay level-headed. And then this morning I wasn't surprised that it was back down to around 2070, which was the all-time high from 2020, and also we closed last week at 2072. And now I think the last time I looked, it's around 2020, just above 2020, the spot price. And I spoke in my video this morning, London time, that yes, it's a good thing for stackers when the price of gold and silver go up in dollars. But the other way we need to look at it in the long term is that the dollar is going down versus a gold and silver in the long term, and that you need to stay balanced, not get too excited, not too despondent, and that it's not speculation. If you were trading gold in Venezuela about 10 years ago, and at one point, the Bolivar did quite well, and you got out and because you're tired of trading, you didn't think gold would go up again. You got left holding a bag of bolivars that is worthless now. And I think the same thing is going to happen to the dollar and all the other fiat currencies vis-a-vis gold and silver.
It is interesting. A lot of people look at the gold price and see, it rising. But at the end of the day, over the long haul, it just means that currencies are falling. Can you expand a bit more on that?
Yeah, it's really simple because, if you look at the price of gold, how many barrels of oil we can get with an ounce of gold, it fluctuates, but over the last 50 years, it's about 15 to 20. So it's a real measure of value. And also I've got here a sovereign, which is just a quarter of an ounce. That hasn't changed today. It's the fiat currency that changes because they issued too much of it. And if you go back even further to 1971, when Nixon closed the gold window, the dollar's lost 98% of its value versus gold. So that's the way to look at it. Of course, there are people out there who will trade gold for fiat dollar profits, and that's completely different. If you want to do that, that's a different game.
It is a different game, and I think it's important when we're seeing this volatility in gold. I know a lot of people might be a bit concerned because, it has been quite a crazy 24 hours. If you look at that chart, swing of $100 at least. It seems like, as you mentioned, you hold up that quarter ounce of gold. That hasn't changed at all. But people who are invested in physical gold right now, what should they be thinking? Because obviously we can see quite a bit of a volatility as we're seeing in the gold market right now.
Yeah, I think the reason why we're seeing the volatility is that we've broken, very key technical levels from the last almost 4 years, that 2050, 2070. And then last night, my time or afternoon your time, someone came in and covered probably a lot of paper shorts, and that took the market way up to just below 2150. Yeah, and it's like a line in the sand. Usually that kind of volatility happens when you break such key levels. We had like a triple top there, and we broke through there. A lot of energy, and that's why that happened. But in terms of the volatility in the last 24 hours, yes, it has been volatile. But I looked at someone put out a report. It's based on the last 5 years, and they've got something called the Sharpe ratio, which measures volatility and return of an investment. And gold is like third on the list. It's been the least volatile and the best returns in terms of the Sharpe ratio. So it's actually a very, very stable, if you want to call it, investment. I think the top two were like a long and short hedge fund portfolios, or stuff that was really hedged. And Bitcoin, for example, the Sharpe ratio on the ranking, they were way down where compared to gold, even though they have done well. So that's what I would say. And the other thing that I always think, because I've been looking at the gold market since '02 when I started buying gold, and I could tell right away that there's something fishy, in the paper market. And but what I tell people is, what's the other option? Do you want to get rid of your gold and put it with the banks as fiat currency? It's not even legally yours. It's an unsecured loan. And the other thing is, well, do you really want to have a lot of money in the bank right now? I don't think so, after what happened in March. And we know the latest FDIC numbers weren't very good. The unrealized losses on securities, it's approaching 700 billion. That's how, whenever I get a little bit annoyed about these moves, I always think, what's the alternative? And to me, there isn't. And the other one is, do you want to finance the current administration in the US, or the current administration here in the UK, where they let in 745,000 net illegal immigrants or migrants in 1 year, which is over 1% of the population. So that's the other way to look at it. By keeping fiat currency in the bank, you're financing all these things. Again, you might be okay with the Biden administration or the Sunak administration. That's up to you to decide.
Now, as we look at the markets, obviously Bitcoin is making quite a run today. It seems like a lot of markets are moving right now. Are there any drivers, or would you say most fundamentally it's the falling of currencies?
Yeah, falling of currencies. I think people are realizing that the central banks are going to have to come back in and stimulate again. The treasuries are stimulating, we're still running deficits. But about Bitcoin, the FT website, they've got Bitcoin on the top of the page and gold at the bottom. And Bitcoin is 38% below its all-time high, and gold just reached an all-time high. It just goes to show that the mainstream financial press, they don't like gold, and I think they want to push people into Bitcoin because it's digital. And if a lot of people wake up to gold and see how nice gold is, how you can hold value, and how private it is, or silver for that matter, they won't go into digital. And with this idea of bringing in CBDCs, you can't have the public going physical, can you? So I think that's the other reason why the Bloombergs and FTs of the world kind of keep gold, on page 17 of the news. I noticed on Friday as well, gold closed at an all-time high, and on the weekend there's very, very little coverage of it.
Which is interesting. I know I recently interviewed Tony Greer from TJ Macro, the Morning Navigator newsletter, and he was talking about how quiet, the gold market is right now. We're making these, we were testing at the time I interviewed him. We were testing all-time highs. We just made a new all-time high above 2,100, but there's not a lot of talk about it. And as you mentioned, it really hasn't gone mainstream yet, which really, I guess, proves the point that it's very likely we could see much higher prices from here, given that the public really hasn't noticed a lot.
Yeah, and it's ironic because today, we reached an all-time intraday high, and now it's come off massively. I bet, sentiment, even within stackers, is really low. So, yeah, like you said, there's very little public interest. It seems like in the last month or two, people have gone back into looking at Bitcoin because there's a lot of sound money people that, have gone into Bitcoin. I used to cover Bitcoin about 6 years ago, and I mean, it's better than fiat, but I still think gold is the way forward. It's like, I'm a golfer. If someone said you have a choice of playing the old course at St. Andrews, going there and playing, or you have a choice of playing St. Andrews on a simulator. I'd take the bad weather in Scotland and playing on the real course than going to a indoor place where it's nice and warm, but playing it on a simulator. That's how I see, Bitcoin. Gold is real money, and Bitcoin doesn't have the thousands of years track record, really.
Now, when it comes to central bank digital currency, it seems like this is something governments are continuing to develop and push onto the public. What is the response that people should have? It seems like it's new and exciting, right? So some people are looking at cryptocurrencies that way. But I would say central bank digital currency is exactly the opposite of everything that cryptocurrencies, promise. Is it's going to be decentralized, it's going to be private, it's going to be limited in supply. And a central bank digital currency is none of that. So what should be people's response when that is finally pushed on the public? For example, here in the U.S. Or in the UK, where you are.
Yeah, you're right. The central bank digital currency, the name itself says central. It's not decentralized on the, they might say, oh, it's on a blockchain, but I think that wouldn't be true. I think, they're very, very determined to get a CBDC through, mainly because the current system is dying, in my opinion, and they have to have a replacement. And I don't think it will work. But how people should react, it's difficult, because so many people are, they think it's convenient. But if you're not of that, opinion, then the only way to try to stay outside of it, and unfortunately, I think if they bring it on and they force it onto the public, we'll have to use it. But having, physical gold and silver outside the system, that's a good thing because they can't control that. And the other thing is, having a lot of fiat dollars or fiat pounds right now in the bank, that could be under threat if they bring in a CBDC, because that they could say you can't use that anymore. We're going to give you CBDCs, but we're going to give you only a tenth of what you had. So that's how I would look at CBDCs. And I was reading again Fiat Money Inflation in France the other day, one of the chapters, and they said that after the assignats, which was their experiment in money printing during the revolution, they tried to bring in something new called the mandats, and that was supposed to be gold backed, but that didn't even work. So I think that's how the CBDC is going to be. They'll try to bring it in. It might work for a while, but eventually it will. It won't be any good, I don't think.
And it seems like going into the end of the year here, if we get back to the gold market, it seems like next year, a lot of people are talking about the Fed pivoting. So fundamentals right now seem to be, better than ever for the gold market. Your perspective on what we could see next year for gold if we do, continue to break out of these levels as we have last night.
Yeah, I mean, the higher the nominal price goes, the moves are going to get bigger. When gold was at $600, 10% was $60. Now 10% is $200, and that's why it feels so volatile. But yeah, we'll have to see what happens in the next week or two. If they're able to push it back below 2,000, they might. But it all looks pretty good, unless, of course, the Fed and the other central banks don't pivot and they stay hawkish and they even tighten. But I don't think that's the plan. I mean, I'm seeing like publications like the FT, saying, oh, they need to pivot. Central banks, they're saying inflation is under control. So yeah, it looks like the market is expecting some kind of cut in late spring. So, and I think gold is already kind of forecasting that. And that's one of the other reasons why, it's been so strong of late.
Before I let you go, Mario, did you want to share with our viewers where they can find you online and any last thoughts you had for our viewers who are definitely looking real close at the markets right now?
Yeah, you can find me on YouTube at Monaco64. I publish a video there every day. And also on Twitter, I'm quite active. It's at Monaco1964. And last words, just always think, if you get discouraged by the moves like we saw today, what's the alternative? Do I really want to jump back into the boiling pot of water, which is fiat currency?
Mario, thank you so much for your time, and God bless.
You're welcome.